Welcome to Alpha Recap. Morgan here. Energetic recap for the close today. And as always, if you have questions, you can reach us at stockalpha.ai. Today we're unpacking regulation, litigation, and a wave of AI crossovers that shape the tape. Drew, thanks for joining.
Thanks for having me. Lots to dig into from this Friday. Some infrastructure filings, an analyst upgrade that caught my eye, and a cluster of legal notices. Good stuff.
Let's lead with the morning movers. 3 items that set tone. First up, Hydro One filed a leave to construct application with the Ontario Energy Board, that's the OEB, for the Durham-Kawartha power line. Translate that for listeners, Drew. What does a leave to construct filing actually imply?
So, what really stands out here is that a leave to construct is the formal step a regulated utility takes to get permission to build major transmission infrastructure. If approved, it can expand the company's rate base, meaning more regulated assets that earn a return, which feeds longer-term capital spend assumptions for Canadian utilities.
Right. Important caveats. The company didn't disclose costs or the schedule, so the financial impact depends on the OEB review timeline and any public comment windows. Analysts will be watching docket milestones for clarity.
Exactly. Project-level approvals and contract awards are the real revenue triggers. Filing matters, but it's not yet cash flowing.
Second mover, BTIG raised its price target on EnerSys to $280. That pushed energy storage and battery narratives back into focus. Tell listeners why an upgraded target matters beyond the headline number.
An upgraded price target signals analyst conviction on revenue or margin outlook. In this case, analysts framed it as better visibility into storage demand and improved unit economics for a legacy industrial supplier. So it's not just sentiment. It suggests models were updated for stronger sales or fatter margins in the storage cycle.
And the storage cycle connection ties back to grid spending. Transmission needs and distributed storage complement each other. More on that in a bit.
Yeah, that tracks.
Third mover, Visa filed a Form 10Q. That's a trove of percentage metrics for payments analysts to parse. Fee mix, cross-border trends, processing volumes. Analysts will plug those new inputs into models while waiting for any management commentary.
Analysts note that even incremental changes in fee mix or cross-border volume can ripple through payments momentum assumptions and affect broader market liquidity signals tied to consumer spend.
Quick reaction segment. Right.
Short and to the point.
Now, shifting gears, the litigation cluster. We saw a concentration of law firm solicitations inviting investors to seek lead plaintiff status in security suits around Calyx, Veritone, and FSKKR Capital Corp. That pattern can be a real headline risk. Drew, walk us through how market participants typically react.
Law firm solicitations typically precede formal complaints. That raises the chance of headline-driven volatility. Analysts note litigation risk can widen implied discount rates on affected names, so cost of capital perceptions shift. And it can create short-term liquidity stress as some holders trim positions ahead of clarification.
Event-driven funds and traders monitor the dockets closely for lead plaintiff filings and any SEC or corporate disclosures. Not every solicitation becomes a material claim, but clustering raises a signal. Watch legal docket flows as a near-term source of stock-specific volatility.
Honestly, I was a bit surprised by how many popped up at once. It's one of those days where the legal calendar mattered as much as earnings noise.
Let's tie that into the broader energy and infrastructure theme we teased earlier. Hydro One's transmission filing, EnerSys' upgrade, and a collaboration between Autel Energy, the UNDP, and Tanzania's utility, that's a cluster pointing to electrification momentum across developed and emerging markets.
Right. And the other thing is, the Autel Energy work in Tanzania is notable even without disclosed financials. It's a signal about institutional momentum behind distributed energy solutions and EV charging deployment in emerging markets, where demand growth can be structurally steep.
To connect the dots plainly, transmission expansion supports load growth, storage smooths intermittency and peak demand, and together they create durable policy and commercial tailwinds for capital-intensive players. Analyst caution: treat approvals and contract awards as the primary revenue triggers, not filings alone.
And execution risk matters. Timing, permitting,
and cost controls drive whether projects deliver the upside models assume.
On to AI. It showed up across three verticals today: legal tech, veterinary AI, and physician leadership frameworks. First, Relativity acquired Gavel to extend AI legal workflows into Microsoft Word integrations, a strategic distribution move that embeds drafting automation where lawyers already work.
Embedding AI into Word removes friction for adoption. Analysts note distribution and workflow embedding are as important as model quality. If you're inside the dominant Office suite, you boost retention.
Then, 5W AI Intelligence reported that Mars Petcare's branded networks, Banfield, VCA, and Blue Pearl, dominate veterinary AI discoverability. That highlights how branded networks can control AI visible discovery and squeeze independence visibility. Kind of a pet care platform play, right?
Yeah, that was a fun one. But seriously, it shows how data-rich branded channels can win in niche AI applications. Public proxies to watch include Zoetis, IDEX, and Chewy, and NVIDIA as the infrastructure link for generative compute demand.
Finally, the American Association for Physician Leadership published a book on physician leadership in the age of AI, a governance signal that could influence hospital procurement and vendor selection over time. Pattern here: AI isn't one market. It's reshaping distribution, product integration, and governance across sectors.
An analyst note, winners will combine quality data, workflow embedding, like the Word integrations, and institutional trust. Those are durable advantages.
Healthcare quick hits. Allegheny Health Network's biomarker Moonshot enrolled more than 11,000 patients over 5 years. That scale matters for blood-based genomic datasets and potential diagnostic partnerships. BRC Therapeutics added Ron Eastman to its board, which analysts framed as a governance upgrade. And a fellowship went to a founder working on a gene therapy for a rare muscle disease. Early-stage signals that can influence deal flow.
Scale in biomarker programs is a big deal. Larger cohorts make validation more credible, which helps licensing conversations. But commercial translation still depends on regulatory milestones and partnership terms.
Consumer and retail notes. Pepsi rolled out the House of Treats platform to expand out-of-home artisanal beverage offerings. A Form 144 appeared for Coca-Cola Euro-Pacific partners. That's a form traders watch as a potential supply signal. And the Texas Super Kings renewed Access Healthcare as a sponsor, a small but telling commercial continuity sign.
Active traders will watch for follow-up Form 4s and trade execution notices after a Form 144 surfaces. That's how you see whether the potential supply actually hits the market.
Market liquidity. The ProShares Bitcoin Strategy ETF rose about 2.7% on heavy volume, roughly 326 million shares, which is the type of outsized ETF flow that can amplify moves across correlated risk assets. What are the microstructure implications here?
Large ETF flows on a single day can shift implied volatility and trigger hedging activity in options desks, which then ripples to related assets. Analysts say portfolio managers should monitor whether the flows persist. A one-day spike can reverse, but persistent flows matter for directional exposure.
Rapid-fire updates. Short takes so listeners can file these away. Relativity's Gavel deal embeds legal AI into Word. 49 North refreshed its global procedure designer tied to new instrument flight rules. An EVA Air executive joins the IATA board, and a municipal district got named a top workplace. Qualitative credit signal for muni bond watchers.
Good roundup. Small items, but they add up for sector analysts.
Let's zoom out to patterns from today's briefs. First, clustered legal notices suggest litigation flows are an active, near-term source of equity-specific volatility. Second, infrastructure plus storage momentum, filings like Hydro Ones and upgrades for battery suppliers point to sustained CapEx cycles. Third, AI's cross-industry embedding is shifting modes toward firms that control workflows and high-quality data. Fourth, liquidity concentration in ETFs can create transitory but powerful microstructure effects.
All of that tracks. The through line is that regulatory and legal processes plus distribution advantages are shaping near-term market risk and medium-term structural winners.
What to watch when markets reopen? Follow the OEB docket for Hydro One procedural milestones. Monitor court dockets and firm notices for follow-ups on the Calyx, Veritone, and FSKKR items. Watch early analyst reads on Visa's Form 10Q, fee mix and cross-border trends in particular, and see how EnerSys' tape reacted to the $280 target and any peer commentary.
Also keep an eye on whether the Bitcoin strategy ETF flow persists. Any early enterprise win announcements from Relativity tied to the Gavel integration, and follow-ups to that Form 144 for Coca-Cola Euro-Pacific partners.
Final takeaways before we sign off. 1. Filings and regulatory dockets are actionable information events. They don't guarantee outcomes, but they change probability math. 2. Litigation notices clustered today remind us to watch legal docket flows as a source of short-term stock volatility. 3. Energy and storage narratives are linked. Transmission supports load, storage smooths peaks, and upgrades and analyst targets reflect improving unit economics in that cycle. 4. AI keeps showing up as a distribution and governance story, not just a product story. And 5. Watch ETF flow persistence. Heavy volume days can change market microstructure in meaningful ways.
Analysts note these are themes to track, not buy or sell signals. Data suggests changing probabilities, and models should be updated accordingly.
That's a good reminder. This episode is informational. It's not personalized investment advice. Analysts note data and filings reported above can influence volatility and valuation assumptions. Consult your advisors and review company filings and court dockets before making decisions.
Thanks, Morgan. I'll be watching the OEB docket and those litigation filings first thing when the market reopens.
Same here. And to our listeners, thanks for tuning in. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. That's stockalpha.ai for questions and deeper Q&A.
Catch you next time.